What is going on, you guys? Chandler from EzStocks here, come back at you with another video. Today we're going to be going over one of my favorite indicators in all of the indicator world. It is going to be the RSI, or the Relative Strength Index. Now, before this video even begins, I just want to let you know, if you are using Robinhood, there are no indicators on that app. So if you're trying to switch over to an app that does have indicators, or a broker that does, then go ahead and try to use Webull. This one I personally use, and if you sign up, deposit $100, you get 2 free stocks as well, valued up to $1,400. So make sure you click that link in the description. Without further ado, let's get right into it. Alright, so you guys may be wondering, what the heck, Chandler, is RSI? So the technical definition for RSI is the momentum oscillator that measures the speed and change of a price movement. So basically, in normal terms, the RSI is an indicator that measures the hype in a stock. So if there's too much hype, then you expect the price to fall down eventually, or if there's too little hype, you can eventually, figure that the price is going to go back up. So my example I like to show is, if you're at a party and your party looks like this, eventually someone's going to play a banger song and the price, or the party intensity, will go back up. So for in our example, when the price drops down below to basically 0 RSI or 0 hype, so the price will eventually go back up. Just like the party, they'll eventually get on their feet and find their way. Now the same can be true as well. If you're throwing the biggest party in the world, everyone's going crazy, the RSI goes all the way up to 100. This is the best party that's ever happened. Eventually the party has to end, and once it ends, everyone's going to be crashing down, and so will the price. All right, so here's the basics of the RSI scale. So basically, it's a scale from 0 to 100, 0 being extremely oversold and 100 being extremely overbought. Now, here's a good chart to look at here. So typically, the two numbers you're focused on, instead of 0 and 100, because you rarely ever will see a 0 RSI or 100 RSI, you want to go off the basis of 30 and 70. So 30, anything under 30 is going to be that under or oversold, and anything above 70 is typically overbought. So obviously, the higher the number, if it's up to 80 or 90, then that's more and more overbought. And if it goes down to 20, 10 or so, that means it's more oversold. And obviously, if it's staying in the middle of these two, it's going to be technically considered fair value or fair hype value. All right, guys, so now going into a real example here, putting the paper to the pen. This is the RSI indicator down here. This is the two lines we were talking about. The 30 line is right here, and the 70 line is right there. So taking a look at the stock Nikola Tesla, this is one of those extremely hyped stocks that shot up a lot. So anytime you see green above this line, that means it was over 70 RSI. So again, anytime you see that RSI over 70 in that green, you know that it's overbought. And anytime you basically have looked at this chart, anytime that it's gone over that 70, you've seen a small fall off or a pretty big dip off there until it comes back to that fair value. So just take a look at any of these peaks here. When they shoot up extremely quick, the RSI goes up very high, and then there's a big fall off afterwards. Same thing, again, can be true whenever you see that red, whenever that RSI goes below that 30 mark, you can see it's going to take that dip and bounce back up because it was oversold, people are overreacting to it, and it bounced back up. Now, one of the biggest lessons I've learned from using the RSI indicator that I want to share onto you guys, I wish I knew this a lot earlier, is when companies have like earning reports and they do really bad and you see just a huge tankage of the price, they normally will recover. Typically, it's an overreaction play. I mean, I don't have any pulled up right here right now because Nikola doesn't have any earnings. But if they have a drastic drop off, that RSI is going to definitely tank. Just look to buy in once you feel like it's hit that bottom. Once it starts to build that baseline and start to come back up, that's when you try to invest in, because typically it'll go up a couple percent from that bottom. Even if it stays down really, really low, maybe it drops 50%. It may recover up so it's only down about 40%. So then there's that 10% swing that you can make off that trade if you are a little late. So this is why looking at this RSI can be such a big influencer in how you buy, because if it starts to shoot up, you really don't want to buy much more, any calls, or buy into the stock when the RSI is in super hype mode, unless you have a feeling that the hype's going to last a lot longer. You don't want to be showing up to a party at 2 in the morning and you're not expecting it, to go on to the next day at 2 in the morning. It's going to be ending soon. So it may be better to play a short position or get a put and go off that hype into the other end. And same thing when it's in that underbought position on that red on the RSI, you know, it's eventually probably going to bounce back. Obviously, anytime the RSI dips below that 30 mark or goes above the 70, it doesn't necessarily mean it has to recover there. It's just an indicator. Sometimes, you know, Tesla's a really good example of this. They'll shoot up 50 or so % in a week, and their RSI will be up to 80, but they won't even come down. But eventually they will come down, but it's not going to be in a dramatic fashion like this. They're going to progressively drop down. All right, guys, so here's another example. This is Facebook. This was when going through that adpocalypse moment where everybody was pulling out their ad revenue into Facebook. You see the RSI tank down there, and you can see it. Just because the price is going down doesn't mean the RSI has to change. It could actually go up. So that's one of those things you have to be able to read and find, you know, other measurements, the MACD and all other sorts of indicators. That's why I'm just going over the RSI. In future videos, I'll go over the other ones so you can see that. But you see volume starts to tank up for the stock here. It finds its bottom and it corrects. It comes back into fair value and it climbs all the way back and it recovers. So big overreaction plays. Again, once the party really stinks, eventually someone's going to turn back on a banger song and that stock price is going to go back up. So the last example I want to leave you guys here with is Starbucks. So again, Starbucks, 1 month view here we're looking at. Starbucks was pretty high on the RSI. It was taken right above that 70 mark there on the RSI indicator. And then all of a sudden it tanked down because they had the news of their stores closing. And it really tanked, went all the way down to, I believe, what is that, like 21? Yeah, so pretty low. Again, the lower the better if you're trying to make a play, a bullish play, that you think the price is going to go up there. But again, with that being said, just a reminder, the RSI is not the end-all be-all. There will be examples and times that you find the RSI was wrong. This is just one indicator to help you on your journeys. Don't take this as the end-all be-all. But hopefully this cleared up a little bit on what the RSI is. Again, if you have questions, let me know down in the comments. I'll be sure to answer it. Or if I need a part 2 of the video, just let me know as well. Good luck on your trading journeys. I'll see you guys later. Peace out.